This is how I'm trading from start to beginning, from step one to step whatever. My first goal is step one, find a direction. That is the goal. And I do mine a little different than how other people do online. If we have talked, this is pretty much the first 5 to 10 minutes might be what you know. I have Asia's high with the big dotted lines, Asia's low with the small dotted lines that are purple. So what I look for now is highs to be taken. So this is London. So Asia starts at 6 p.m., ends at 3 p.m. And then London starts at 3 p.m. to 6 p.m. So what I'm looking for here is for what is this going to do? Are we going to go chase down these highs? Are we going to go chase down these lows? That's all I'm looking for. And then I'm normally not trading here by now. I'm normally trading at 6 o'clock for pre-market. So pre-market is red. Pre-market high, pre-market high, pre-market low. So now what we'll be doing is using these highs and lows to find a direction. And I have made some adjustments from when I was making videos. I had to stop because of work wasn't really working with me schedule wise. But I have also adjusted some things. So you can see how like when okay, 6 o'clock opens and we just take out this London. There's no trade kind of here, but if you do like a break of London's high and then a retest and then a go, you can find trades off of this, which would lead to the DOM. But for right now, we're just trying to find direction and a bias off of like targets, so to speak. So like when you're coming down here, I would think I'm using Asia's high and London's high as like a support zone. So now we're playing kind of like support and resistance, so to speak. And then you can also see like this pre-market when the market opened in black, that means the market opened. You can see these candles just got under pre-market and then held. And then we started to hold above Asia's high. And this is where you can get your bullish ideas because now we could target pre-market high because like once it is hit, I don't consider it anymore, but you can see like it made the high and we never touched it all through here. So now we can use it as okay, we got support here, we can have a target here. So now we have a target, now we have a possibility to trade something. We just have to find something that works. And that's where like trading with um my next thing would be don't lose yourself. This is the box we made from Asia's high and London's high, and you can see how it holds. So if I just take off some of this to make it a little less confusing, I'll even take off the green one for now, just because it's not needed, but you'll understand what I'm using it as. So now we have a zone that I like. Where's I'll add it. So you can see Asia's high, London's high, and that's the box that I made on this chart. It's the same ticker and everything. So now I have a target, right? I have the target and the idea that this pre-market, we can go hit this. And we're holding this like support zone. Now we come to this chart. All this is a EMA zone. So like if I click it, you have the 21 EMA is at the top, and 50 is at the bottom. So then it creates like a cloud. So it's like a moving support and resistance off of averages, which the market moves a lot by averages. So once we're holding this support idea right here from like London's high and Asia's high, you also have this 15-minute EMA cloud that I tend to like. And then you see like buyers have been in control this whole time, right? Buyers are totally in control here. Sellers can't make another low at all. Like they're pretty screwed. Like it's just higher low, 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 higher low. Like they can't make any lower low. So they're just getting their ass kicked. So once you see we come down and we take out this pre-market low and there's no movement under it and buyers just absorb it immediately and then we don't even see it again. We never come back down to this. So that means buyers are in control. And now you can use like all of this stuff to have the idea that we are going to go touch something up here. And we don't need this whole trade. We can trade from here to here. It could be hundreds of dollars, thousands of dollars. It just depends on how much you have. And then it's just like a lot of break and retests with like these highs and lows. So like we reclaim, let me get rid of this. We reclaim London. So I'm gonna get rid of some of this. So we broke down from London's high and sellers got under there and was able to get it down here. But then once we reclaim it and the sellers can't get back under, they're losing. They had a temporary win. That's it. This is temporary. Why would you want to join a temporary movement? We want this. Like this is probably more of a riskier play right here, even though I would probably take it just because I'm comfortable with my trading. But the better plays is like once you reclaim this London's high, you got all of this to play as like a little bounce up spot. And it's just the same thing like with these other clouds. So this is a 1-minute cloud and the gray. I just have it gray because I don't want to completely pay attention to it, but if we're having a strong trending day, I might use it. That's why it's gray, so you can see it, but you can't see it. So I use the 9 EMA to be the top and the 21 to be the bottom, and that's just what I like. And then if I add that green back in, that's nothing more than a 5-minute one. So this is probably my favorite to play off of. It's based off of a 9 top and then a 21 bottom. And then it makes the cloud of the area that I want to play in. And then I guess this MACD I have to talk about. So I like to add in the MACD down here to get it look better on this one. So the MACD here is based on a hour. So this is a hour MACD, even though I'm looking at the 5-minute time frame. Because everything about me is just following the trend. Everybody hears that and everybody says it, but not a lot of people follow it. Like a lot of people try to resist the trend. So I like to use high time frame things that are pointing out a trend. So it's like I use the hour MACD. I use the 15-minute cloud. I use the 5-minute cloud, the 1-minute cloud. And then I also use this big ass one, this uh, orange and purple, which is a 4-hour time zone. I mean, a 4-hour EMA. And the top is 9, the middle is 21, and the bottom is 50. And these are just common EMAs that are used by people individually. So they'll have like a 9 EMA just on the chart and not like a cloud form. And then 21, they'll have it. It's just common ones that people like to use. I just like it in cloud form because I like the idea of like if we come in and we get in here, we are just waiting for buyers to take over and then break that trend line like right here. So I'm looking at this to be support. Boom, boom. This is support. And I'm just waiting for this to crack and then we can get in and keep pumping. It's the same idea. And this is like a high time frame. Like this is an hour time frame. And this is a 4-hour zone. And then that's all I'm doing. And then I'm doing the same thing just on a lower time frame, right? I'm coming in. We are coming in. We're coming into my moving support, right? And now we're just waiting for it to break this kind of trend because I think this trend is stronger than this downtrend. Because this downtrend means nothing. Everything's moving up. You see how this thing's moving up? We're not going sideways. We're not going down. We're going up. So I'm moving with the trend on the 15-minute. And it's just like support and resistance. Higher time frames are always more dominant. So like you see the 5 minutes working in to the 15, but the 15 will always be stronger than the 5-minute. Same thing with like the 15 going into the 4-hour. And then you just got to get comfortable watching this stuff to pick up on it. It's time on the chart. If I can, I mean, that's just roughly how I trade. If I had to break it down in like a 15-minute time, if I had to give everything that I do. These lines definitely mean a lot to me, these dotted lines. They're normally my targets and stuff like that. Or like, I do a lot more with them, so it's like hard to explain it all in one. Like, let me find it. It's just been trending up so much. Like you can see right here, Asia's low, Asia's high, and then London stayed within the Asia's high and low because the pink is inside the purple. Nothing broke out. And then pre-market start, what we do, we just wick down. We wick down out of this Asia's low, and then buyers reclaimed it, held it, and then pumped to the other side. And then once the market opened, which is black, it goes and chases pre-market. We couldn't find any more buyers to drag us up here. Sellers took over, and all we did was chase down the pre-market low. And that's how I kind of get the ideas here. And what I'm trying to do, which was, I was definitely confused when I was making videos on how I used everything, and I deleted some RSIs and stuff like that. Stopped worrying about the footprint so much. It's like, this is my new thing here. So I have the targets with here, and I'm kind of watching this more, the MACD. So the MACD is trending down, right? The MACD is trending down. So anything I want is, I'm looking for down movement here because I just want to go with the hour time frame move. So once it pops in, you got all this highs here. And I'm going to short into this. And then this is probably previous week's high right there, that blue line, and that's why you got such hard rejection. Again, I'm just trying to move with higher time frames trends. I don't want to mess with stuff that isn't that. And if I'm looking at like the 1 minute time frame on what I was just marking out, that's why you see all the markings, you can see where the trades are. And when you dip into here, you're messing with this 4 hour zone. And plus this blue one, that's another 4 hour zone that I have that I like. That is, oh no, that's a rectangle. I thought. I have a EMA that's blue somewhere. It's this one. It's like a 4 hour, 150 is the top and 200 is the bottom to make that zone. But so I had a support zone in here too, because I do play a little bit of support and resistance, but it always comes down to where's the lines, where's the MACDs, and then the EMAs kind of give me the move. God, it's so hard to explain sometimes. I'm gonna figure a way out to I'm going to figure a way to explain this better one day. Maybe it makes sense, maybe it doesn't. But it's like MACDs, MACDs, I want to go with that. And then I want to see what high and low is taken on these Asia, London pre-market. And I want to see what's struggling and what, like that type of stuff. Like you can just see this, like high, high, high. No highs are overlapping each other. So pre-market didn't take out London, London didn't take out Asia. So I would kind of look at this as a resistance. So if you're playing support and resistance, or you're familiar with support and resistance, I would say all these highs are up here and none of them are overlapping each other like over here. You see how pre-market came under London, under Asia, and that was it. They're overlapping. There's at least one that's overlapping the two. There's nothing overlapping here, so we could probably say there's strong sellers up here. And once you dip into this, you dip into this resistance, and you're working with this MACD that's going down on the hour time frame. And this is why you get this hard rejection. It's all ideas. I've been much better than when I was making videos before. I had too much going on, I think, and I keep eliminating some things, making it a little bit cleaner, even though there's still a lot going on, and I would understand that. But I used to have a bunch of MACDs on another chart to see what the MACDs are doing, but too many of them made it confusing. Plus, I had RSIs, which made it confusing too. Where I just want one. It's like an hour time frame, and I like to go off of that. And I've been hitting a lot of success with it. So it's like right here, if I'm looking at this, we're breaking out all these highs. We're way above it. So I'm not looking for it to come down and chase these lows because the buyers are completely in control, right? And when I'm looking at these EMAs on the 5 minute and the 15 minute, I'll play like, okay, we're coming up, We tap this. This is one tap, right? After it taps twice, like right here is another one. So you got to play here, you get to play here. The third time gets a little risky because the third time, the next stop could be the 15. And you'll see that by watching it so much. So like I like to play the first time it comes into the zone. A lot of the times I like to play it the second time after it pops up. And then I like to wait for it to come back down to the 15 after that. So my play would be one play here, two play here, and then my third play would be over here to get a little pop off of this 15-minute cloud. Because after like two or three pops, it kind of loses its momentum if it's not just going to go higher. So like if it hits this 15-minute and it does nothing and we don't like take off like it is right here, I don't want to play this too much. So this is like one for the 15-minute and then maybe two on the 15-minute. And then I really don't want to play it anymore because it gets sketchy after like one or two times. And the whole thing about trading is trying to just stay on the positive side. So it's like these little moves right here can be hundreds of dollars, thousands of dollars, hundreds of thousands, depending on how much money you have. Like you really don't need big ass moves. So like right here, you take out all these lows of Asia, London, when the market opens, the MACD is kind of flat, but we're in this 4 hour zone. This 4 hour zone, the purple to the orange is a 4 hour zone. You take out this low, you you take out this low right here, and we don't find more sellers to pursue this down. If this keeps going down, then we have a different conversation. But the thing is, it held. And you're looking at this as like support and resistance from Asia's low and London's low. Now we draw the support, it held, and now we play. You don't have to play right here. You could play once we get back over VWAP, which is white, and then now we getting closer to the blue getting over the pink, and it looks more promising. We're bouncing off of a 4 hour zone. We took out these lows. What's left to be taken out? I wouldn't consider this pink because we took it out with pre-market. See how red goes over top of it? But nothing went over top of this purple. So now that we have this momentum, now our MACD's turning, now we can start saying, okay, we can get up to this Asia's high when we're like right here. And then we could start playing all these little pump downs, especially this one right here, because it goes and then right into the green. That's our first pump. That's thousands of dollars, hundreds of dollars, depending on how much you play. You don't need to make so many moves. You'll see when I do a live trade probably this week because I think I'll be home unless my schedule changes. But you'll see how much cleaner. Like I definitely had my trading strategy when I made those videos, but you could tell I was very confused sometimes because I was still putting it all together. I think the MACDs, getting rid of a bunch. I was watching like 4 different MACDs and like 3 different RSIs, and it was making me confused. Now that I brought it down to one, so much better. And then I also made the rule of like bouncing into the EMA once or twice and then stop playing it. That's something I developed over the last couple of weeks because I realized like after the second one, can it work? Yes. But is it worth the risk? It, it isn't most of the time. So I just leave it out. But the first time it goes into the green, I might play it heavier. So like if my max contract's 20, I'm trying to get to 20 contracts as fast as possible because I think it's going to pop that first time almost all the time. And then the second one, I might only use 10 contracts because I'm a little bit more iffy about it. Even though it should work, it it also couldn't work. And then once you get back into yellow, again, we're going to go back into high contracts the first time, which is about 20. and I spread them out. So it's like if I want 20 contracts, once we come in, we go maybe one, and then we'll add 3 here, add 5 here, add 10 here, add the rest down here. So it's not all one spot. So then like if it gets all the way down here, we have a average price of somewhere probably around here, which makes it a whole lot better than just putting on 20 here and our average price here, because it very well could just do something like this and then come up to there and then just stop. And maybe you want to take profit, but from here to there with 20 contracts, you're still talking about 500, $1,000. That's why I like to add in on the EMAs. It's kind of important to have all of it. I mean, if I would say what's important, it's the Asia's high and low, pre-market high and low, and I think I would add in the MACD to be just as important now with those. So it would look a little bit more like um, this. See how I don't have the EMAs on here? Because when I don't want to be confused with the EMAs, I just want to focus on the highs and lows and what we could target. And if sellers or buyers are just crushing the market meaning by like if we get up over all these highs, there's no more highs left. Are we holding above it? Are we in a super trending market? Same thing with the downside. If we break all of these lows and we still just keep going lower, that's how I find out about a trending day. But then you have to also worry about like, are you going into a big support zone like the 4-hour EMAs? It's like something like 70% of the time the market goes up. So like people that want to constantly short the market, it doesn't really make sense to me. There's definitely times in like a couple weeks where it's good to short the market, but majority of the time you should just be a buyer. It's easier because 70% of the market, 70% of the time the market goes up. Why be on the 30% side? Unless it's very obvious or it's like a short move and you just want to get a little bit and get out type of thing. But that is my complete trading. I'm going to figure out how to say it better and direct it better. Just somebody asked me to do something like this so they can kind of watch it. Um, and that would be it. Like, if I had to place what should be first, it would be understanding the highs and lows, and I would add in the MACD. I wasn't really all for the MACD before because I had too many of them, but put the MACD on the hour time frame and go with that. I think it's much better because then you can read these highs and lows a little bit better. You can go MACD's down when it pumps into these highs. I want to get short because I want to go with the MACD that's an hour time frame, and then we could target pre-market low. That's how I would tend to try to teach first. So understand everything that's on this page and then start getting into the EMAs. Because the EMAs are just, they should just build more confidence off of your idea of this. So like if I think, um, let's say this pre-market I thought was going to be the bottom and I wanted some more ideas to support that. The bottom right here is also like we're pumping into the 4-hour time frame here. So it's easy to say like we're going it. I think that's the bottom, and it's also the 4-hour EMA, which is a lot stronger than any other EMA, the green or the yellow, because it's 4 hours. It's on the 4-hour time frame. So it's easy to add to whatever you think the market's doing. And maybe you don't want the higher time frames, maybe you want the 5 minute, the 15 minute, maybe you want none of this and you want to be more just on this. It's whatever you understand, whatever makes you see trades to make money. That's it. And you will see, I'm gonna try to make some videos this week if I'm, like I said, my schedule stays how it is, and show how much cleaner I am, because you're gonna see exactly what I talk about. I think this was my trading um this week, which has been getting more clean and more better as we go. So we did almost 2 grand pretty much, and it was pretty much that. So 435, pretty much three, almost seven, and then three. And then we could talk about like win rate 80%, which is typical for me. Because I dollar cost average in, this is pretty much always very similar. One might be a little higher than the other, but it's not something I worry about. I worry about the trade win percent, because if these are break even, all I got to do is be more right at that point in my eyes. So long as I'm 80% right, this could be even down to the 70s, really. I could be losing about $50 and making about 25 and still be profitable. So I focus on win percent being correct, which relies on you not to have tilt days. So I'll try to get more into this. I'll try to figure out how I want to explain it better, but that's kind of what I got. Any questions, just ask. Maybe I'll figure out a way to explain it better as I'm talking to somebody.